Hello, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia. Today it is the 19th of August 2022. We are in the middle of August right now already. So thank you so much for tuning in. Thank you so much for being here and being on time today. If you guys can hear me loud and clear, please say a hi to me in the comments and also in the chat box, wherever you are. So this live stream is actually broadcasted on both YouTube and also on Facebook. So just say a hi to me. Just make sure that everything is okay, good and well before I kickstart this session. I'm very friendly. I won't bite. Okay, if you could, okay, do give me a like, share, or comments. Liking is free, doesn't cost you money, but it tells YouTube and also Facebook algo that you want to see more of our content in the future. And remember to like our Facebook page if you haven't done so, and also subscribe to our YouTube channel as well. Very simple. You can just search for MarketWise Asia on both Facebook and also on YouTube as well. So let me take a look at the comments first right now. Hello, Mary. Okay, Han Hock, Amanda, Hongju. All right. Chon, are you planning for a Penang trip? I would like to spend you dinner. I think not so soon. I think most likely not going to Malaysia this year. Most likely maybe next year I'll be heading to overseas. Okay, but maybe not this year. All right. So thank you so much. Okay. Yep. And Kenny, Imran, Pat, Stephen, Hadley, Forrest, James, Jessica. Okay. Hey Jessica, yeah, I'm going to send you the Nets card very soon. You're one of the winners, right, Jessica? Okay, SP, Long, Mark, Han Hock, Jimmy, Alvin, Tenling, Pauline, okay, Vetu, Siok Guan. All right, fantastic. Good to see every one of you here. All right, I'm Pauline. Okay, I see Pauline also. Thank you so much for being here, all right? So on the market today, it is down. Nasdaq is already down 2% already. Okay, so I'm not sure whether how you actually read my Telegram channel and also on my Facebook page. I mentioned that, the market looks a bit toppish, momentum could be losing strength looking at the VIX and such, right? Okay, so let me share my screen right now. Okay, let's kickstart this. I hope I could, finish this Facebook Live, YouTube Live within 1 hour. I hope so lah. Okay, I don't want to spend too much time on this because I understand that some of you might be tired. All right. Okay. So disclaimer first. Let me go to my sharing here. Oops, not this one. Okay, you guys can see, right? All right, so as usual, disclaimer, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. My opinion doesn't mean that I'm right. So, okay, so please do your own diligence. All right, whatever I share is just for entertainment purposes. Okay. All right, so today's session, as I mentioned on the Facebook and YouTube description, is that the recent stock market momentum could be losing strength. Indeed, today it fell hard today, so it's losing strength. I will dissect the S&P 500 chart with the updated support and resistance level, and also highlight some of the sectors that I am avoiding or particularly vulnerable. And I also share with you my VIX data, where to get this data. So if you actually subscribe to our Telegram channel over here, you guys can see my screen, right? All right, so I actually shared that, where is it? Okay, this VIX. Okay, so VIX historical mean, the average, okay, the average. So it's 19.6, the data from 1990 to 2022. They based on the data that I have. I'm going to share with you where I get it and how to actually calculate this data yourself. How many of you are actually interested to know? If you're interested to know, just type yes in the comments. If there's no more than 20 yes, I won't share with you guys. Okay. All right. So if the VIX does spike, then the stock market will have some downside to come. So and also these are the things I share with you on the Telegram channel over here. And also previously, I also shared with you this VVIX ratio. Later, I will go through again. I saw some divergence over here. So I already kind of, warn you guys. So do you realize that I don't actually explicitly say out what I trade or what I didn't I trade. Okay, I don't. This is not a signal service. And it shouldn't be so. That's why I don't really tell you what I trade and what I do. But you can infer from my sharing that what I will actually do. Okay, based on my sharing on the Facebook Live, or I posted on the Facebook page or in the Telegram channel. Remember, this is not a signal service. I do intend to do so. First of all, this Facebook sharing is free lah. Okay, you all don't pay me anything. Okay, and also don't provide a signal service. And most importantly, I'm not licensed. I'm not licensed to give you financial advice. Okay, but you can infer from my sharing what I actually do. Again, I'm not always correct. I do have losses as well. Okay, but at the end of the day, don't listen to me also. Okay, you need to have your own judgment. Whatever I share, listen with a pinch of salt. If you feel that it is good content, then you absorb it. If you feel that I'm talking nonsense, then it doesn't matter. Just throw away, because you're not paying me anything also. Okay, but at the end of the day, important, you must have your own judgment. Be it you listen to any guru or whatever it is, or from YouTube, you need to have your own judgment. All right, Ken. So talk so much already, right? So I need to share with you this. Okay, so this Telegram channel, if you haven't subscribed to our Telegram channel, do register. Not do register, do subscribe. It is free. It is free. So I posted the link in the comments. You can see the link on your screen also, and you can just search for MarketWise Asia. All right, and if you're watching this on YouTube, okay, also do subscribe to our YouTube channel, where I also post, watch the replay or whatsoever, new information, or post on the YouTube channel as well. So I posted the link in the chat also. You can also see on YouTube on the screen over here. Okay, or you can just search on YouTube, MarketWise Asia. You should be able to find our YouTube channel. Okay, so there are a few things to talk about. Okay, so before I go into the big sharing data, let me see the yes. Okay, I can see quite a number of yes, but I think there are still many of you never say yes. Okay, but doesn't matter. But at least can you give me a like or not? Right now we have about 200 people combined on YouTube and also on Facebook, but there's only 44 likes. Can give me some likes or not? Give me some likes. Liking is free, doesn't cost you money now. Okay, don't be so gamsiap lah. Okay, give me some likes. If you can share, just share it. All right. So before I go into that, right, this Market Insights Virtual Summit, all right, it is on the 29th and 30th of October. Let me share with you the link over here. You can see this screen. I'll also post the link in the comments. All right, so the keynote speaker for the October Market Insights Virtual Summit is actually Tom Basso, one of the hedge fund manager, and also one of the market wizards, okay? One of the original market wizards in the book, Market Wizards. Okay, so he'll be speaking and talking about the all-weather portfolio. And as usual, if you pre-register for this event, I know it's a bit early, but you pre-register. When the time comes, I will send you additional extra bonuses, can be reports or videos, etc. But you need to pre-register so that at least I know where to send this information to you. All right, so just fill your name, email address, and mobile, and you are good to go. So let me share with you the link in the chat one more time. Okay. Okay, so let's kickstart this session, right? So by now you should know that this Fed, the rate hike, is in the pipeline after the Wednesday news. Okay, the Federal Reserve meeting over here. This is again old news already. This is not new news. Okay, so the inflation is still staying elevated. Okay, as I mentioned in my previous Facebook Live, right? Anything below 9.1 is anchoring to that 9.1 already. So, but you need to know, like 8.5% inflation, it is still high. Okay, and all this, people think that the Fed, it is still high. They need to continue to hike to increase the interest rate. So this is just one news to let you know in case you don't know. Okay, nothing fanciful. You should already know. Okay, and yeah, talking about these VIX, right? So as I mentioned just now in my Telegram channel, oops, yeah, over here, right? So where do I get this data over here? Where do I get the historical mean over here, 19.6? Okay, so this I'm going to share with you is actually macrotrends.net over here. All right, macrotrends.net over here. So this is the VIX historical chart data. Okay, I will post the link in the comments. comment. All right, you should see it over here. Hey, I can see that polling, Henry, you're registered for this event already. Thank you so much for supporting. For the rest, as usual, the event is free. Just go ahead and register, okay? So once again, I posted the link in the chat on this macro trend. So this is the volatility index, the VIX historical chart. So give you a chart from 1990, all right, until 2022. So over here, all right, at one glance, can you guys see where is the average value or not? All right, ignore the the random occasionally spike here because of the market crash and correction. But average, can you roughly see where is it? No? All right, the top is somewhere around here, right? Okay, the bottom is somewhere around here, right? So the mean, the average, right, is somewhere around in the middle, correct? Can see that visually, you guys can see, right? So it's about 20, you guys can see, as I said, minus all the occasionally spikes over here, okay? But I want to know the exact data, how to get this. So you can see on this chart over here, right, there is this download historical data over here, right? This red button over here, just click on the download. It should be in your local drive, okay? Just open it. This is on a CSV file. Basically, it is the spreadsheet lah. Basically, it's spreadsheet. You can see that it is 1990 all the way to 2022. Okay, it can be a bit small, but doesn't matter, not important. So basically, you just need to copy. Okay, copy the data over here. Copy the data over here. All right, copy the data over here. Copy the data over here. All right, just copy it first. All right, then you head over to this standard deviation website over here. Wait, let me save the copy thing first. Okay. Okay, so where is the link over here? Let me see. It is standard deviation. Calculatorsoup.com. Calculatorsoup.com. So go over here. By the way, standard deviation, all this, in case you don't know, it is like how the price can deviate from the mean, the average value, how far it can deviate. Okay, of course, the higher the number, it means that it can deviate further away from the average price. All right, and this standard deviation, variance, mean, all these are based on the normal distribution curve. Okay, later I'll share with you. Okay, and very simple, I'll post the link in the comments over here in the chat also. All right, so this calculator soup. So just now I mentioned already, I already copied all this data right over here, right? So it's on the chart over here, right, in the website over here, this historical data, you can see that it is actually year by year, okay, all the way from 1990 until to 2022, okay, year by year. But if you download the historical data over here, it's actually every single day. So you can see that there is actually about 8,000 rows over here of data over here. Okay, so not important, doesn't matter. So important is the data that you copy and paste. Okay, copy and paste. Okay, go to this calculator soup. Where is it? Calculator soup. All right. Then you just copy, paste it inside. All right, and then you calculate. All right, you calculate. So let me zoom in right now. Can you guys see or not? All right, can you guys see? So the standard deviation, all right, it is 8.00. Basically, it's 8 lah. All right, can you see that the mean, all right, the average value, the number of count over here, 8,220 data over here. Okay, the mean, can see, I try to zoom in a little bigger. All right, the mean is actually 19.6. Okay, this is where I actually get the data for the Telegram channel over here, 19.6. Okay, do you understand what I'm trying to say? If you understand, just type 19.6 in the chat while I take a sip of water. Very simple, right? Is it simple? It's simple. Just type 19.6. You know where to get it. You know how to get the data and such. 19.6. Because along the way, all these VIX data will change. As the years go by, as the months go by, you can use it to check it yourself. Just type 19.6. If you think this is interesting to you, you find it value, just Give me a like, share, or comment. I will appreciate that. So 19.6, all right. So if you go to the VIX chart right now, you can use it. This is where I plotted, 19.6 over here, 19.6, okay, 19.6. So the one standard deviation, so it's 19.6 plus 8. Just now we saw already, right? Just now we saw that the standard deviation is 8.00, is 8, right? So 19.6 plus 8. So one standard deviation is 27.6. Okay, so this horizontal red line over here. So 2 standard deviation plus another 8 from the mean over here is 35.6. So this one is 2 standard. This one is 3 standard deviation. This one is 2 standard deviation. Yes, correct. So 2 standard deviation. So 19.6 plus 8, 1 standard deviation, 27.6 plus another one, 2 STD is 35.6. So you realize that, for the VIX, the mean is 19.6. All right. When it is elevated, price can go to 27.6. Somewhere you can see that when price reach about this, 1 standard deviation, kind of hit a resistance level, right? 2 standard deviation, all right, it is 35.6. Can you see that every time it hit there, okay, price just is like the fear is at a relatively peak value, okay, for a normal correction. All right. Of course, if you don't talk about the very major market crash, it can go above 3 standard deviation. So the 3 standard deviation is actually 43.6. The fourth line over here, I can see that when price hit there in 2018. Of course, the COVID was a black swan event, hit a very high level over here. Okay, so generally, this is how I calculate the standard deviation. By the way, in case you don't know, standard deviation on this number, right? 1 standard deviation, which means that, okay, for this 27.6 value, right, 65% of the time, okay, all right, price will stay within this 27.6 value. So will stay below, okay, will stay below 27.6 value, okay. 2 standard deviation, about 90, is it 78% of the time, okay, 78% of the time you stay within below 35.6. all right. 3 standard deviation, okay, about 99.7, I think it's 99.7, okay, 3, that's 99% of time, okay, 99% of time, okay, the VIX will stay below 43.6. So as I mentioned, right, when there's a major market crash, when hit for this 3.6, 35.6, that's a good time actually to enter the market and such, right? So again, so polling said interesting, right? So if you guys think that this is interesting to you, just type yes in the comment. Just type yes in the comments. Okay, just type yes in the comments. Give me some support, or else I like one person talking to myself like that. Just type yes in the comments, kind of. And also give me a like and share. Okay, so I think by now you guys should understand this VIX, how I get it. So it's no longer a secret. It's very easy to get. Okay, nothing secretive. You can just do it yourself over here. And I will go through a few things over here. Okay, right now already more than 20 minutes already. Okay, so I'll talk about the breadth trust, the market sentiments, the price action and such. Okay, last week I talked about oil. Last week. Or I say that in last week, it is down from the June high, and then there is a potential for a reversal, and it seems that price is quite resilient right now. Price for oil could continue to head higher. Can you see that for the past 1 or 2 days? In fact, today, even the energy sector, the oil, it is still pretty strong. So this was what I shared last week over here. But okay. Looking at the oil chart right now, since I'm into oil, over here, in fact, oil right now actually surged 1.6%. Okay, so the reason previously I mentioned that the inflation data, the CPI number will come down, which I mentioned a lot of times already, based on the commodity prices. It's a leading indicator. Looking at the commodity prices, there's a 1 month lag. And because in June, price actually fell for commodities. In fact, for a lot of commodities, let's zoom into oil. So it fell. So typically 1 month lag, the CPI data should fall as well. But in recently, price kind of range over here. It is not going down further, right? And if even for a worst case, if the oil price continue to head higher, okay, which means that in the coming 1 month, 2 months, 3 months time, okay, the CPI data, it is not going to fall further. In fact, you're going to stay at an elevated level, okay, which means that most likely I believe the CPI data will stay between 7 to 8%, that kind. Okay, I don't think it will go above the 9.1% unless the commodity, like for example, crude oil price, it surge above 121. Okay, then I think that the CPI will hit more than 9.1%. But right now, if price continue to stay like that, zigzag, stay at this level, oil level, about 90 plus level, or even worse, go higher, right? Then inflation, you're gonna be stay elevated. Okay, you stay elevated. If you understand what I'm trying to say, inflation stay elevated. Okay, just type letter E. Just type letter E in the comments. Stay elevated. Okay. So I go through that already. So this is why I talk about the oil and such. So I'll go through some of the things, the market sentiment and such. And as I mentioned, right, the Fed is going to continue to raise the interest rate hike. And given from the recent earnings from the retailers like Walmart, Target, and such, right, the earnings generally, okay, it is still pretty strong. Consumer spending, it is still okay. Unemployment rate, all this is still okay. So I think, okay, the Fed still think that they still can continue to hike further without causing a recession. Okay, of course, recession, there's always a possibility, because I think the Fed know that based on the strong market right now, the strong economy, I think they can still afford to raise the hike. And if they afford to raise the hike, they should continue to do so. Okay. All right. So I don't talk about the interest rate anymore. So this is just my view over here. Okay. All right. So I hope you guys can get the broad macro kind of ideas over here. All right. And talking about the breadth trust and market sentiment, right? I actually mentioned, I think last 1 or 2 weeks, I said that. Did I mention that? Okay. I mentioned that. Okay, I didn't put. I mentioned that long term I'm still bullish, but short term wise, within the few weeks to 1 or 2 months, the market need a correction because it is really overbought already. Okay, so the overbought. Move the lines over here. Okay, so kind of overbought. Okay, need a correction over here. Okay, overbought need a correction. Short term a bit bearish. All right, and referring to the breadth trust, why did I feel bullish is based on certain also sentiment and such. I'll share with you guys. So referring to the investor sentiment over here, which I really pull out the chart over here. Okay, so this data I got it from Sentiment Trader over here. Okay, this is spanning from 1990 to 2020. All right, so can you see this data is actually from the AAII bull ratio, because this is a American association individual investor or don't know what lah. Okay, basically they have this membership where all the retail investors are inside, and they will do a poll like what is their feeling right now, how do they feel the market, are they bullish or are they bearish? And you can see that we have actually hit a kind of a very pessimistic level over here. Okay, this circle down. They are very pessimistic over here. So based on the previous, kind of sentiment, when it is kind of overextended, they are very bearish, right? And that most of the time, the masses, right, is always wrong one. Okay, they always do the wrong thing at the wrong time, the retail investors. So after that, market continue to go higher and such. Of course, it's not always smooth sailing. There's always this war of worry. Okay, market always climb with war of worries. Okay, every single year, you find that even though it's still a bull market, but every single year there are some news to scare you that market's going to come down, market's going to come down, and such. So yeah, there's always a war of worry while the bull is intact. So in 2018, sorry, 2008. So there's also this war of worry over here. Okay, so climate now is at the bottom over here. But of course, this doesn't mean that, this AAII bull ratio is 100% accurate, because you can see that during the 2008 great financial crisis under the GFC, okay, GFC in 2008, the sentiment is actually already down quite a bit before it do a final, crash over here. It's not always correct, but we can roughly know that the sentiment right now is pretty bullish for the long term for all these investors right now. So this is one thing which makes me bullish, because a lot of people are bearish, okay? And the market always do the wrong thing, do the right thing to how do I say that? The market always like to do things that surprises most people. Okay, Ken. All right. This is one. This is the market sentiment over here, and the other one is actually the small traders put call premium. This is actually what the retail traders are actually doing right now. So let me pull the chart over here. Let me find the chart. Okay, wait, just give me a moment over here. Okay, so this is also, I got this data from this sentiment trader as well. So this is the small trader put call premium. Essentially, it is telling you how many of the traders are buying the put options, how many are buying the call options. Of course, if the ratio is exceptionally high, like this, which means that a lot of these retail traders are piling on the put options. If you buy a put options, okay, where do you think the market is going? Is it going to go up, or is it going to go down? Is it up or down? You can tell me your answer over here. Okay, I won't drag the time, but you should know. Okay, if all the investors are putting in the put options, it means that they are expecting price to go down a lot more. That's why they're going to buy the put options right now. Okay, so Henry, it is down. They buy put options, which means that they are forecasting the price to go down. So can you see that, in after 2002, there is elevated level. After that price, the index just go up. In 2008, 2009, it is at the elevated level. After that, the market goes up again. In 2020, the COVID crash, when it's crashing so much, investor felt scared. They buy more put options, but it is at a peak already. Too many people are buying put options. Too many people are bearish. The market always, surprise most of the retail investor and traders. Most people are wrong one. Okay, retail traders are always wrong one. They always do the wrong things at the wrong time, and then the market just rebounded. And right now we are also at the elevated right now. So the small investors is still piling on the put options right now. Okay, and this data is pretty new. Okay, latest at about 17 August right now. So this is from Sentiment Trader. Sentiment Trader, it is not free. It is not free. This is a paid data. You won't get this data for free. You won't get it yourself. So it's a paid data. All right. So yeah. So small traders are still piling on the put. So this is to let you know it is at an elevated level. So you guys, should know that most traders are always wrong. Okay. So this is the put call premium, and the other one I'm going to share is which I already mentioned before, is actually the breadth trust lah. Okay, I mentioned that percentage of stocks above the 50 days moving average, above the 200 days moving average. Okay, which I shared with you previously. So this is the breadth over here. This one. Yeah, percentage of stocks above the 50 days moving average for the S&P 500. You can put it on a line chart over here. In case you want to know, right, the ticker for this on TradingView is S5FI. I post the link in the chat. Okay, S5FI on TradingView. Okay. So you can see that this trust was actually very strong. This trust was actually very strong. Okay, generally when there is a very kind of a strong trust over here, it's a good sign for the market, especially it is at a very low level over here. Okay, so previously it was in COVID. Okay, was at a very low level. There's also sudden a breath trust. Okay, within a few weeks, the percentage of all the stocks are above their key moving averages already. So this is a pretty strong signal also. And previously in 2018 also there is a breath trust over here. So you know that 2018 after that the correction in 2018 after that the market continued to move higher. In 2020 there's a very kind of a pessimistic view. Okay, people are all fearful 2020, and after that people are selling, and then there's a breath trust. Okay, and then the market continued to recover, and right now we are having this breath trust right now. But again, as I mentioned last week, right, we are near the overbought region over here. It is good that there's a trust, but short-term wise, too elevated already. So about 93% of all the stocks are above the 50 days moving average. And whenever there is such optimism or at an overbought level, market will do a correction. Market will do a correction, market will do a correction, market will do a correction. Okay, so these are the price action, the sentiment, and also the market internals over here. Okay, and talking about that, right? Last week I mentioned about the VVIX also. So in the Telegram channel, it is this VVIX over here, Okay, over here. So again, for those who are new to MarketWise Asia, I actually use this VVIX ratio over here. So VIX, you guys should know that it is actually the volatility index, right? So basically, it's talking about the implied volatility for the S&P 500 options. Okay, so the VVIX is actually the volatility of VIX. Volatility of volatility. How come I sound like Indian like that? Okay, so the volatility of the volatility. Okay, the volatility of volatility, VVIX. Okay, and yeah, again, I don't want to explain too much. Okay, doesn't matter. All right, you can go to this site over here. Okay, VVIX. There's a site that can explain to you in a much better way. Important thing is you need to know how to use the ratio. The explanation can go to this site over here, Luck Box Magazine. So explain to you what is VIX, what it is VVIX and such. Okay, all right. So you know that VIX is actually the implied volatility of the options in S&P 500. VVIX is calculated using the implied volatility of the out of the money put option. Okay, all this you can check it out yourself. Okay, I won't go through that. But this is the VVIX ratio over here. The VVIX ratio over here. Okay, let me show you over here. Oh, by the way, this VVIX thingy is I also learned it from Bini. Bini is also one of the summit speakers as well. So I also learned from all the other gurus as well. And of course, after that, she mentioned to me, I actually do a kind of study on it so which I think is pretty good to determine the market over here, or whether it's at a correction mode or at a buying mode, that kind. Okay, especially if there is a divergence. So the previously I was pretty bullish on the market. Okay, because everything is in tandem. Okay, the VVIX, the one below here is SPY, is SPY, the S&P 500 ETF. So it is moving up, it is moving up over here. But recently, right, if you drew down in recent days, over here, I try to zoom in so you guys can see. Okay, it is not that obvious, but it is a good sign for me to see while the market continue to chunk up higher, right? Okay, the VVIX actually at that point in time is actually showing some sign of divergence, a very very strong divergence already. So it's kind of, while it's just like topping off, right, the VVIX is starting to go down a lot more already. Okay, so this is sign that which I think that the market could be peaking topish at least for the short term. And based on the Telegram, I think this is clearer over here. Can you see over here at the point in time on the 17th of August, just 2 days ago, all right, while the S&P, it is still climbing up. The VVIX ratio, it is already down over here. Okay, so divergence, and based on the historical data over here, you can treat the VVIX like also as an overbought and oversold level over here. When the VVIX is at a high level, like level 7 or level 8, you can see that the market, you can see this kind of complacent level already, okay, too complacent. And when it's at the bottom over here at level 3 or level 4, then the market is at a fearful level over here. Now I see a spam, okay, spam message, okay, comments. Okay, never mind. So yeah, can you guys understand what I'm trying to say or not? So this is the divergence also give me kind of a clue that the market could be coming down, plus the breadth which I mentioned, then the percentage of stocks above the moving average. And also just by looking at the price action alone, you should roughly know that the market, it is overextended. Okay, so just by looking at the price action over here, you know that it is a bit overextended, so need some correction for the bull market to be sustainable. Okay, so if you understand everything is good, okay, everything is well, you just type good in the comments. Just type good in the comments so that I know that everything is good. We can proceed further while I take a sip of water over here. So right now we have about 265 people in the room, combining from Facebook and also on YouTube. 265 people in the room. Okay, can you give me a like, share, or comments? Liking is good. It doesn't cost you money. Okay, and for those who just joined me earlier, who just joined me now, okay, just to recap once again, we have this Market Insights Virtual Summit that is coming up on the 29th and 30th of October. Tom Basso, it is the keynote speaker. So very simple, okay? Just pre-register for this event, fill up your name, email address, and mobile. Mobile is mainly just for SMS reminder, no spam, no nothing, okay? And the keynote speaker is Tom Basso. It's an American hedge fund, and also the original market wizards. And you can talk about the all-weather portfolio for the last lap of 2022. And as usual, if you pre-register now, you get to access these exclusive bonus materials and report. You receive these reports much earlier than the rest of the people. So again, it is free to register for this event. I will post the link in the chat channel, or you can see this link over here. And once again, do subscribe to our Telegram and also the YouTube channel over here. Okay, so I post the link also in the comments. Okay, the YouTube, we have about 1.6k subscribers already, but I still need more people. Okay, I really want to reach out to more people, so subscribe to the Telegram and also the YouTube channel. Thank you so much. Okay, and then let me see the comments so far right now. So Darius is asking, if wash and rinse happen in the next few days, would you buy in? I will share with you later. So I'll share with you the key support and resistance later. Okay, and so Rush D is asking, so I think that the market could move down in the short term. Yes, short term meaning that maybe about a few weeks, that kind, or at the most 1 to 2 months. Short term 1 to 2 months. Okay, long term wise, I think I'm still quite bullish for now. Okay, and let me go to the chart right now. So let's go dive deeper into the chart right now. So this is the Nasdaq chart. Let's go to the S&P 500. Okay, and okay, I think there are a lot of people are looking at this trend line over here. Okay, ignore this blue line over here, but I cannot remove. If I remove, then this trend line also cannot see. Okay, so I need to put the trend line over here. So this is the trend line. I will redraw again. This is the trend line that people is looking at. It is looking at, okay, almost hit it, or hit already. Yeah, hit already lah. Okay, hit already, and then people are looking at expecting a correction over here. All right, and also people are actually looking at the key moving average also. The moving average is the 200 days moving average. Ignore the cloud over here, ignore the cloud over here. All right, I remove the cloud. Okay, so the rate, I think there are a few key moving averages over here, but never mind. The key moving average is 200 MA, 200 days moving average is this red line over here, this red line over here. So it actually hit. In fact, another leading signal that the price could have a pullback is actually from the Russell 2000, from the Russell 2000, the small cap, the small cap. Okay, the small cap. It is the first index to hit the 200 days moving average. So this is the Russell, it is RTY futures. Can you see that previously it was the first to hit the 200 days moving average and started price starting to come down already. Okay, so this is just moving averages. But okay, go to the S&P 500. Okay, so based on my method of analysis, for those who have been watching me or with me for the longest time, you should know that I use the cloud and also the central pivot range and pivot point, right? So again, I think can be a bit messy, but never mind. Just follow me over here. Price, okay, previously price has been always been downtrend, broke above the cloud on the daily time frame. It is on a uptrend, right? So pretty simple, straightforward. All these people should know. And I also say that when price is above the central pivot range, it's a good sign, which tells me that the downtrend is weakening. And this time around is the second consecutive month that price is above the central pivot range. And it tells me that there's a very high possibility that longer term, okay, the market is turning from a downtrend to an uptrend. And coupled with breaking above the cloud, also this is an uptrend to me, at least based on the daily time frame. So if you want to know how I use the cloud, the central pivot range, the pivot points, okay, you can go to the YouTube tutorial over here. YouTube tutorial over here. Oops, not here. This one, YouTube tutorial, the cloud CPR thing. Okay, and if you are there, do subscribe to our YouTube channel as well. Okay, so over here. All right, but on the weekly time frame, I also mentioned before, I think last week, okay, we are hitting the cloud. Okay, we think hitting the cloud over here. So maybe I'll just use this clearer to you. Aha, can you see that? Hitting the cloud, right? Hitting the cloud, this is also a resistance level over here. So longer time frame, okay, we are still not out of the woods. We are still, hitting some major resistance over here. And the Nasdaq, okay, longer term, okay, we are still below the cloud, okay, we are still below the cloud, okay, downtrend. But if you use the weekly time frame, if you wait for it to break above the cloud, by the time it happens, right, then it is price will have ran up a lot higher already. So we want to use the daily time frame to zoom down to take a bet that we could be in a uptrend already. So this is one of the signals that I'm looking at. Okay. So right now, at this point in time, right, I just want to do a very quick poll from you guys. Okay. Do you think, okay, this is a dead cat bounce right now? Okay. Or do you think this is just a minor correction, a pullback? Okay, what's the difference? Okay, maybe I need to explain further. So if you think that this is a dead cat bounce, you think that price is going to drop all the way down, okay, all the way down and break the previous June swing low over here, which means that this is just a fake rebound and price is going to make another lower low over here. If you think this is the case, type DCB, dead cat bounce, in the chat. But if you think this is just a pullback, okay, which means that, okay, we are right now in an uptrend, but, market overextended, market need a correction, and then price will continue to head higher, okay, then you just key in pullback. Of course, I don't know how deep is the pullback. The pullback could be just shallow like this, or go down a bit deeper like this and go up, or even deeper like this and go up. Okay, but it should not hit below the prior swing low over here, the June swing low. So if you think that it is dead cat bounce, you go even lower below the June swing low, type DCB in the comments. If you think this is just a simple pullback over here, okay, just type pullback in the chat. All right, let me see the comments. Let me see the comments. So generally, most I can see that it is a pullback. Okay, pullback before the, James is saying pullback before end of year rally, mark pullback. Rashdi is saying that could be DCB if earnings get cut, possible. Okay, nobody knows. So mostly pullback. So right now it seems that you guys are quite bullish. Quite bullish. All right, unlike the sentiment where the small traders put call premium, where it's at an elevated level. Or are you guys influenced by me? To be honest, I'm very objective one. I'm very objective. If price is going to break below the low or below the CPR again, then I'll be back to bearish mode again. So right now I am still mid-term to long-term, I'm still bullish lah. All right. So let me go through the levels right now. Okay. So this where do you think the pullback could go to? Okay. So what I will share with you that this. Okay. So of course, previously I was using the volume profile, right, to see where is the price where there's the heaviest volume transacted, right? So right now, ever since the June swing low, the market has moved up substantially from the low to about 18%. Okay. So I'll use this rally to anchor my volume profile. Okay, volume profile. So fix volume profile here. Okay, volume profile from the low to the high over here. Can you see that? I actually drawn this already. Okay. So can you see that? Of course, the point of control POC, where it's the highest volume at a particular price, is actually at this level here, 3,830. Okay, there's a huge volume here at 3,830. This is based on S&P 500 futures. 3,830, about 3,830 over here. Okay, which I don't think the price could do that, but possible. But I don't think, because it's too far away already. I don't want to predict so far ahead. But can you see another mountain or not? Another peak. Another peak is here. Another peak is here. This is the peak, right? This is the peak. Another peak is here. So this is also a very high volume node where a lot of people transacted at this price. So this level is actually at about 4120. 4120. So a key support for the S&P 500, okay, which means the S&P 500, the pricing is based on the S&P 500 futures, okay, 4120, okay, it's at 4120, okay. Key in 412, Henry very fast, 4120 in the chat, 4120 in the chat, time 4120 in the chat. So I'll be looking at the support at 4120. If the price do come down, okay, and from right now, from this price right now to the 4120, it is down about 2.8%. Okay, I think pretty normal, down 2.2 to 3%. I think it's pretty normal. Let's say if price cannot hold at this 4120, another level that I'm looking at is actually this level over here. Okay, can you see that this level over here, this one over here, there's no volume. void, there's no volume, or volume or volume vacuum, void volume. There's very, very little volume. So typically when there's a void, there's a volume void, right? It can be also acting as a support level also, okay? Support level also, which is somewhere around 4060, okay? Somewhere around there, 4060. So these are the key checkpoint. Checkpoint. It doesn't mean that price will go down there, but if price do go down to this level, 4120, 4060, then these are key support level that you should be looking at. And then we will see that, if price can do a bounce over here, can do a bounce from here, okay? So 4120 and 4060. You can key in 4060 as a second support area over here. So this is based on the volume profile support. Do you realize I don't use the typical kind of support standard and resistance support? I don't do that. Generally, I don't do that. But I will know where is it. So at least I know where are all the retails looking at, which I don't really do that. So because I need to know where the support resistance that most people are looking at. Okay, you need to know. Okay, you need to know before you can break the rules. Okay, you need to know what most people are looking at. All right. So Nian Yu is asking, what indicator is that called? This is called volume profile. Volume profile. Okay, volume profile is only for premium user of TradingViews. Then you can use volume profile. Free user, you cannot use that. Okay, but never mind. You can just, based on my sharing, you know that at least 4120, 4060 is the support area. And based on my usual way of doing, adding in the central pivot range over here. Okay, central pivot range. Okay, I'll do this CPR. Okay, easy for you to see, right? Can you see that previously, when price, hit the CPR, see the CPR, hit the CPR, hit the CPR, hit the CPR, price will acting as a resistance. And when price rebounded, okay, at the CPR over here, price will go up here. So right now, the CPR will be acting as a support resistance also. So very coincide with the 4060. So the upper range of this CPR is at about 4067. Okay, and then price will come down. Hopefully, then you see price action if price can go up or not. So 4120, 4060 is a key support level that I'm looking at. Okay, technically, okay, by before the end of August, I don't think price will break below the central pivot range. Okay. So most likely in September, the central pivot range should be somewhere around at a higher level over here in September. Okay. Again, I don't want price to break below the central pivot range. If price break and close below the central pivot range, then I will back to more of a bearish mode over here. All right, so price need to stay above the central pivot range. So again, I repeat, this month, August, was just left about 10 more days. Okay, I don't think price will break below the CPR. Okay, so most likely we need to look into September. Okay, and see where the CPR will be acting as a support, right? Price shouldn't break below the CPR. All right. There is asking, right? If price do a wash and rinse before it hits support area, is it not good to buy? I have to see the price action first. So looking at other indicators before I make a decision. So it's not just it is not just I see a wash and rinse and then I'll just buy. So I'll look at various factors. Is it at overbought, oversold level? Is it how's the sentiment look like? Is there any positive divergence between the VVIX and such okay? But generally, okay, the wash and rinse is a good trigger for you to enter. So I'll look for the wash and rinse to have a trigger. The trigger will most of the time is a wash and rinse, but I have to look at various other factors to determine whether I want to buy in or not. Okay, so yeah, so as I mentioned previously, right, so you can infer over here where did I go? Okay, so Kenny actually asked me, I short the index, I think 2 days ago, on August 18, 1 day ago lah. So yes, I have a short position. So I have a short position. I already mentioned already just now in the earlier Facebook Live. If you join me later, I already say I don't give trade signal. I'm not licensed to do that also anyway. And you're not paying me any money also. And I don't become a trade signal service. But based on my sharing, you roughly can infer what I did, okay, what I do. Okay, so yes, I shorted the index, the QQQ, NASDAQ 100 QQQ. So I shorted somewhere around here, this level here. Wash and rinse trigger, wash and rinse trigger, okay, wash and rinse trigger. So this is a wash bar over here. This is a wash bar over here. Sorry, wash bar is this one. This is a wash bar over here. And then this is a rinse bar, right? So wash and rinse trigger also here, plus all the sentiment indicator, the breadth and such as at the overbought value. That's why I decided to do it a short. Okay, and again, I don't know. Right now I'm in profit, so I will want to protect my profit. And don't ask me whether I can short now or not. Right now, I mean that can short, but I mean the risk reward is not at the best level, and I don't know whether this will be a very deep or shallow pullback. So this is the Nasdaq. Also, Nasdaq is about the same also. Nasdaq can see doing the volume profile, you can see that the peak value is also at this area over here. The peak value it is hitting the peak value right now. So I'm not sure whether this will be the support or not for the Nasdaq. So right now we are hitting a support now is 1326. 13260. Okay. 13260. 13260. So yeah, I'm looking to protect my profit also, trail my stop and such lah. So 13260. So if price cannot hold and go to the next level, will be at about 12950. Okay, 12950. This is for Nasdaq lah. Okay. Yeah. If you too confusing, just refer back to S&P 500. But right now for Nasdaq, we are hitting a high volume node right now. Okay, high volume node right now. Okay, Ken. So Linda is asking, how do you install the volume indicator? There's nothing to install because if you're using the Trading View Premium, I need to be a paid subscriber. You just head over to the indicator. You just search for fixed volume profile over here. Then you're able to get this volume profile indicator over here. All right. So recap over here using the S&P 500. Okay. We are above the cloud, above the central pivot range. So everything is still okay so far if you're talking about the uptrend. But short-term wise, okay, I expect price to have a pullback. Again, I do not know how deep is the pullback. Pullback could be just, like that. Maybe next week will be go up like this already. I don't know. I seriously don't know. But watch the price action. But the key support area that I'm looking at, if price do hit certain level, is at 4120 and also at 4060. If price really do come down over here. So is everything clear? Just type clear. Clear in the comments. Okay. There is asking if Nasdaq hitting a support area right now, if wash and rinse happen immediately, and after it's still not a good buy based on the VIX divergence and market breadth. For me personally, I will still not buy. I'm okay to sit on the sideline because this is just the index market. Right? There are other stocks, ETF to trade. If the market continue to move higher, because definitely some are a bit lagging. Some of the stocks doesn't move so fast yet. Okay, and I will trade those stocks if price has proven to go higher. All right, from the Nasdaq, because I think that the price will be better to have a steeper pullback. Okay, but again, I'm also wary that a lot of people are waiting for this pullback. Okay, I'm also wary about that. Again, I'm wary that a lot of people are waiting for this pullback. So the pullback might not be as steep as people want it to be. Okay, might not come here. Okay, and then just maybe it could be like this and then go back. Who knows? Nobody knows. So, okay, I'll be looking at the VVIX ratio, for example, see whether there's any divergence or not. Okay, but personally, I prefer price to do a steeper pullback. Then this will make the correction, make the bull market sustainable. Okay, all right. So I only see a few clear. Doesn't matter. Okay, give me a like, share, or comments is also fine. Give me a like, share, comments. So right now we still have 260 people in the room. Fantastic. Okay, staying with me until 12:30 a.m. So only have about 111 likes. Give me a like, share, comments. Give me a like. Liking is free. Doesn't cost you money. Okay. Yeah. So not just these factors. Okay. My method of entry can be also discretionary. So it's not just, as I mentioned, not just watch and risk and enter. Looking at other various indicators, market internals and market breadth as well. All right. Ken, any questions so far? Any questions? If any question, you can just ask in the chat box. Okay, we answer a few questions before I end it the day. So right now we are already at the 1 hour mark already. Any question? Any question? Just type in the chat box. Okay, so I already answered a few questions along the way already. So yeah. So talking about energy XLE, it is still pretty strong right now, but hitting at a resistance level right now for the energy sector. Okay, energy sector. All right. So Glenn is asking, right, do you think S&P 500 will be positive by year end? Right now, based on the price action that I'm seeing right now, I think my personal view is that it could go higher until the end of the year lah. Okay, of course, based on seasonality, okay, seasonality, okay. September, October, it is not generally a good month. In fact, for August, also not a good month. So you can see that August, September, or October, not a good month. October onwards, then the market generally tend to be bullish. This is also in line with what Larry Williams said also. So typically he said, at the end of the year, market might do a rebound once again. Okay, so overall, I'm still bullish about the market. Okay, all right. So Hong Kong, James is asking about Hong Kong. Hong Kong, bearish, still bearish because of a lot of this issue with the CCP and also with the delisting issue and also with the CCP and between the tech companies. It's still ongoing. So for Hang Seng, yeah, it is still bearish, but in a way, it is still good that it's still consolidating. Okay, didn't break the previous low over here. Okay, but absolutely wise, we are below the cloud, below the central pivot range. We are looking to just swing trade long or position trading. This is not a good time to buy now. Okay, so it's still down. Okay, don't buy now lah. Okay, unless you want to hold for long term, hold for 1 year, 2 year, 3 year, that kind. Then I think okay, but if you're talking about swing trade short term, then we are still downtrend. All right. Okay. Dennis is asking, is this small trader PC premium same as SKU? I am not very sure. I don't think so. It's not the same as the SKU. Okay, I don't think so. Okay, I'm not too sure about that, so I cannot give you the answer because I'm not very sure on this SKU thing also. But I don't think so. It's the SKU. Okay. All right. Rashdi is asking, at what level will you take profit on your short level? So I'll just give you an example over here. So QQQ, right? So let's say I shorted somewhere around here. My take profit not different. My stop loss is somewhere at high over here. Okay. So let's say, for example, my risk reward. Okay, let's say my entry over here, my stop over here. So let's say, for example, if I risk $100. Okay. All right. Typically, if my risk to reward, okay, above 1.2, okay, I'll be happy to take. Of course, it can reach 1.5, then I'll be happy to take. Okay. Generally, it can be quite tough to hit risk to reward too without holding on for quite a while. It generally, hit like that. 1.2 to 1.5 reward, 1.5 risk to reward is quite achievable. So generally, if price can hit 1.5, I'll take profit really. Okay, most of the time I'll take profit, full profit. Okay, and of course you can trail and a lot of, but this is not the objective of it can take quite some time to explain. But generally, okay, yeah, got 1.2 to 1.5 profit. Okay, I'm ready to take. Okay, I'm ready to take. Okay, all right, I'm ready to take. Ken, I hope that answer your question. Meaning that, let's say for example, if I risk $100, okay, if I have $150 profit, okay, then I will take profit. That kind. All right. If not, I will trail my profit. But most of the time, I will take full profit lah. That kind. 1.5, I'm happy to take for a swing trade. Okay. What would be the energy stocks likely to go up? Okay, generally the energy stocks is stronger than the oil itself. So energy stocks, right? You can go to XLE lo. Okay, XLE energy stocks ma. So go to ETF.com/XLE. All right, then you know which are the energy stocks that you should be looking at lah. So I won't go through individual stocks, but you can go through yourself. Okay, it is ETF.com/XLE. I'll post the link in the comments. Okay. So XLE, yeah, so these are top 10 holdings you can see. All right, Exxon and Chevron, Conoco, Phillips. Okay, all right. What is the sectors? The sector that I'm recommending is actually the energy sector. So a lot of sectors like the consumer discretionary and such, right? Let me go through that last since I'm there. Okay, market in out. This watch list sectors. Sectors over here. Can you see that? For the past 1 month, actually today rise a bit for actually. Okay, how do I say that? Okay, a few days ago, actually the XLY consumer discretionary, industrial, okay, technology was at the top, but right now it has fallen already. So previously industrial, consumer discretionary, technology, okay, are very bullish. So right now I'll be skipping that. And for the 1 week change, okay, in fact, based on back to defensive again, the consumer staple utilities is going possible to hit higher because of the market correction. When the market corrects, okay, people will tend to move their funds into the defensive sectors. Okay, and other one that I'm looking at, is also looking at the healthcare, also not too bad also. All right, but I'll be skipping the industrial, the tech for now, and the consumer discretionary. They are overextended already. And for the one that I'm looking at is actually the energy also. Energy sector looks pretty strong, but I'm still deciding whether to enter or not. I haven't entered into any of the energy stocks right now lah. Okay, still looking at that. Okay, so 1.2 to 1.5 take profit. What is your win? How can everybody is so fixated on the win rate? Not always I take at 1.5 lah. Okay, a lot of times, but there are other trades on FX also I don't take at 1.5 because I don't just trade stocks only. So typically about 50 to 60% win rate, that kind of, okay. All right, for the stocks about there. All right, positive lah. Okay, so don't be so fixated on the win rate lah. Okay, as long as your risk to reward is positive, okay, I think that is fine. Okay. Yeah, a lot of people like to ask about what's the win rate. Okay, so any other questions so far? Are you holding on to SBI? No. Okay, I mentioned last week that I already exited SBI. I did exit SBI. All right, I took profit at the R2 level over here. At the R2 level over here. In hindsight, it was a right thing to do. I take profit almost at the high over here. almost at high, because I treat some of these XBI also as a swing trade. Okay, when price overextended for quite a bit, I decided to exit. Okay, and if price do come up to a certain level again, I think it's good support, then I will buy again. Okay, then I will buy again. But right now, I already exited XBI. Okay, but overall, I think XBI still have potential. Still potential, because it is still above the cloud, above the central pivot range. So if you're holding on as a trading position, I think it's still okay. But again, this is just my personal opinion. Okay, I could be wrong. Price could just do like that. Okay, you have to stop loss in place. You have to have your own judgment. But right now, based on the price itself, I think it is still okay. It's still okay, above the cloud, above the CPR. So it's still a healthy correction. But personally, I already exited at the R2 level over here. Okay. Glenn is asking, do I trade Nikkei? No, I don't trade Nikkei. Boeing lah. Trade so many things. I have to trade Asian hours, trade forex, trade stocks. No need to sleep really. So I don't really trade in Nikkei. All right, Ken? Yeah, I don't trade Nikkei. Okay. Chia Hong is asking, what do you think about the dollar index? Okay, let's take a look at dollar index. Dollar index. Dollar index, okay, previously I thought it was going to weaken, but right now the market is undergo correction, risk off mode. Okay, people are heading back into the dollar again. And again, initially I thought it is going to go down, okay, but it didn't. Price continued to head higher. So right now it is still heading higher, which I think price will test the high again. Okay, we test the high again. So most likely can test back the high again over here. So my view is that dollar index continue to go higher. And talking about the dollar index, I might as well go to the bonds. Okay, bonds wise, not a very good sign. So previously I thought the bonds market can hold over here, all right, but it didn't, which I mentioned last week that I took a loss on the TLT trade. It didn't go higher. So right now, there's no entry right now. It continued to go lower, which means that the interest rate, the yield is going to go higher. This is what the market is expecting. The market is expecting. Bond price goes lower, the yield is going to go higher, which means that the 10-year yield right now, it is going to continue to head higher possible, which could be the tailwind for the stock market. Okay, previously when the yield drop, that's where the market rally. But right now the yield is continue to go higher again. How high it will go, I'm not sure. I can't tell you for now, but it's going to put pressure on the equities market. And the Fed already said they will continue to hike. Until the inflation is back to a pretty normal level. I think 2 to 3% is their level. So right now we are still at an elevated inflation level. So that will put some tailwind on the stock market. So if this interest rate continue to hike, then it's going to put pressure on the equities market also. Yeah, these are also some of the things that I look at. Okay, not just the price action alone. Okay, all right. So can you see the price right now for the Nasdaq? Price seems to reject at this high volume node over here. Okay, so we'll see how it goes at the end of the day. All right. So any other question? So I think 1 hour 15 minutes already. Okay, I think let's call it a day. Once again, if you find value in this sharing session, can you just type value in the comments so that I know that once again I'm giving good value, good content, good knowledge to you. Okay, give me some support, give me a like and share also. So you think the things that I share with you today, how to get the VIX value, how to get the VIX data and such, right? Give me type value in the comments. I also share about the breadth trust, market sentiment, put price action on the AAII bull ratio, the small trader put call premium, and also the breadth trust over here. And also share with you my price target if there's a correction on the S&P 500 and also the Nasdaq also. Okay, so yeah, give me some encouragement, type value in the comments, give me a like, share, and also. Okay, All right, so I think with that, I thank you for your time. Thank you for staying with me until 12:45 a.m. in the morning. So once again, I wish you have a good evening and also have an enjoyable weekend ahead. All right, so that's all for today, folks. So we'll see how the market will perform next week. All right, so thank you so much. Thank you and goodbye and 晚安. Bye bye.